Darren, longer-term interest rates declined this quarter despite the Fed raising interest rates in June. What do you think going forward for interest rates? Going higher, going lower?
Well, I still anticipate that longer-term rates will move higher, but you're correct. It's very peculiar when the Fed raises rates and at the same time longer-term rates actually declined in the quarter. But it happened in the second quarter, and I think the primary driver of that was we're seeing increased buying from Asia. China has been buying a lot more treasuries than they have in the past because their currency has stabilized a little bit. And then at the end of the quarter, we actually got a kind of a low reading on inflation, and higher inflation usually drives rates higher. So when that declined a little bit, the probability of the Fed raising rates in September declined a little bit, and the probability of 3 rate hikes next year declined a little bit. So the market was a little bit concerned that maybe if inflation doesn't take off, that we're going to see rates kind of in this little bit lower zone. However, right now, real rates, if you take what you get from a 10-year treasury and you subtract inflation, is 50 basis points, 0.5% after inflation. Long term, that's closer to 2%. So I still think there's momentum to the upside. The Fed has said they're going to shrink their balance sheet next year. They said they're going to raise rates. If they continue to do this, I think the market's finally going to give in and say, okay, rates are going to move higher. And I think lastly, we finally saw interest rates overseas move higher. So during the quarter, U.S. rates declined. We actually saw rates in Europe and other countries move higher. So the delta, the rate, the incremental return you get from investing in the U.S. declined a little bit. So for some foreign investors, they may not find the U.S. quite as attractive going forward as that delta has shrunk a little bit. So I think all the momentum is pushing rates higher. We've got a full unemployment situation, so eventually we're going to get wage inflation, which is a big driver of inflation long term. So all in all, I think rates will move higher despite the fact that they've kind of been in this steady zone for much of the year.